Hello, everyone. This is Wilson Cole, and I'm with Adams, Evans, and Ross. And I want to talk to you guys, and it's kind of been a theme just because we're seeing more and more private equity-backed companies coming in for collections. I'd shared in one of our other recent videos, I believe it was the Wall Street Journal, and I could stand to be corrected on that, but I believe they had written an article where private equity was 10 times more likely to have one of their backed companies file bankruptcy. And the one thing that the article had mentioned, or I may be getting it confused with a documentary that I had watched, but regardless, the information was talking about just private equity and how it's kind of changed even the stock market here in the US. In the olden days, the way that it used to work, if you had a company that had a great idea and had a little bit of a track record, they would do their IPO and they would get their money for expansion and building out their business from the stock market. They would go out, they'd get an underwriter, one of the stock houses, and they would do the IPO and it would sell for, $10, $40, $100, whatever it is a stock. And they would sell off some of the equity to get the cash so they could scale the business. Well, the problem that you run into with private equity, it's changed that dynamic. It's no longer when a company goes public, it's no longer how a company scales and becomes a bigger entity and things on those lines. It's how the initial investors and how the owners now cash out of this company that they built. And I never really thought about it that way, but it made absolute sense, because what happens versus the old way is that you have Series A, Series B, Series C, whatever it is. And I can't tell you how many clients or debtors that we've gotten in where they say, hey, we're getting in our Series C, or we're getting in our Series A funding, or whatever round of funding that they're getting. When we get in these funds, we're going to try to take care of it. Now, the thing that I tell all of our clients is they never get in as much as they thought, and it never goes as far as they thought it would. But what happens is they use those series of funding rounds to, in essence, scale the business. To all of the investment and private equity firms dump the money in there versus the stock market. And so let's say they dump, I'm just using round numbers of a hypothetical company, $100 million in, and they grow this company. Well, when they go to the market and they go to trade publicly in the IPO, they sell it for $500 million or $1 billion or whatever that stock price is. So all those investors get 5x, 10x out of their money. The owners get their money out. And so now the stock market company is public. And is it worth that or is it not worth that? I think that's open for argument either way. But the reason that they went public wasn't to get in additional cash so they could scale. The reason they went public is so all of these early investors can now cash out, take their money, and move on to the next deal. So just kind of keep that in mind as you're dealing with private equity-backed companies. And I know it's sounding like a theme, but I would say 1 in 10, 1 in 9 companies that are coming in here for collections are private equity backed. And it's a different beast. We're still able to collect from them, but the techniques are much different. And kind of jokingly say here, it's hand-to-hand combat, because you're dealing with a very educated debtor that typically has a lot of resources, and it's just a different dynamic in the collection. So kind of keep that in mind as well. But also keep in mind that if they're trying to go public, they're going public to get all their money back out of the company. Just an interesting statistic I thought I'd share with you. If we can help you with any collections, by all means, please don't hesitate to give me a call or visit our website at staffingdebt.com and book an appointment to speak with me or one of our staff attorneys. Hey guys, it's Wilson again, and this video was brought to you by Adams, Evans, and Ross. And if you like the video, please make sure that you click on the subscribe button and also like the video. If you have any questions or comments, please leave those below as well. If you'd like to learn more about our company, please visit our website at staffingdebt.com. And also remember, if there's no collection, there's absolutely no cost at all.